Hey, what's going on, guys? Hope you guys are well today. Welcome to the YouTube channel. I'm in long hair Star Wars mode today, but that's no matter. We can talk about trading. So this is going to be a bit of a short clip, and I'm going to talk to you about a few interesting things in regards to trading and behavior patterns of market participants, certain things I've experienced in the last couple of days, and I wanted to just kind of touch base with you guys and talk about it because it might be relevant to you. So here we go. So we're going to talk about edge in trading. All right, so getting the edge and keeping the edge, and what does the edge consist of? And really, there was one thing in particular I wanted to talk about, which was the whole concept of fighting the market, that is. And this is what a lot of traders are doing on a daily basis. So what I've come to understand from my own behavior patterns is that I really do poorly in trading when I'm fighting the market. And what I mean by fighting the market is really I'm fighting myself at the end of the day, because essentially what I'm doing is I'm placing trades based on ego, based on wanting to be right about something, or based on an idea you have that you want to fulfill the idea. In reality, you're not listening to what the market's saying, you're just trying to fulfill an idea that you have in your head already. It's not based on reality. Just in case you guys are wondering, you can see that thing hovering around my screen. That's where my eyes were looking when this was recorded. It's not where my eyes are looking right now. If you want to see where my eyes are looking right now, here we go. There we go. I'm looking to the left and I'm looking to the right. A little gimmick I'm working on for another video. I'm going to read you some excerpts from a conversation I was having with a friend. And some of this is my own stuff, so it could be personal. But I'm sharing it with you guys on YouTube just because that's what the point of this channel is. So this is me talking right now. I say, I have lingering frustration from 2 years of trade with little to no dollar success. My knowledge doesn't help me, it hinders me, because some part of me believes that will be what makes me profitable. In a way, yes, because I have the edge in terms of the tools and knowledge. It doesn't stop it from blinding me to what the market is saying. I need to approach the market from a place of wanting to learn something, not a place of wanting to be right. Yesterday, I was just battling the market, trading mindlessly every opportunity I saw on the tape, but I was blinding myself to the bigger picture. When you trade on your own, not in a firm, it's really hard to just stop. The ego gets melted by the market, and you don't want to admit it until it's too late. The worst shit is that even when you come up with an idea about a trade, that is self-destructive too, because you've programmed an outcome in your mind. Then I keep going and I say, for my style of trading right now, I need to, number one, leave my opinion out the window. Number two, leave my ego out the window. And number three, literally just read the tape. And every trade is based on fact generated by market information. And then in parentheses, I put one-time framing, footprint chart, volume profile, and order flow, basically. So, what is a fact about a market is literally what's happening in real time right now. So if I could say this is a recording of today's screen, you can clearly see that we had a really nice run up in the morning, and then we had something of a buy climax. At least I would consider this a buy climax because the sellers attacked it very aggressively. It looked real good. Let's keep going. This is still what I'm saying. I have a problem with lingering bias because I lost money going short. I have this story I'm telling myself about how when the time is right, I'll make a ton of money going short. In reality, it doesn't effing matter if you're making money long or short. It's all about what the market is saying. That's the point I keep missing. If you get driven to a point of trading from ego and not listening to the market, your edge is gone and you got to stop and reassess. So that's pretty much what I wrote to my buddy. My buddy here wrote some really good stuff that followed it, and he gave some good examples. So I'm going to read that to you guys. All right. If you're enjoying the video, guys, don't forget to hit the like button and subscribe. All right, here we go. So this is my buddy talking now. He says, trying to be right instead of trying to make money. That means you're trying to win against yourself instead of trying to win the actual game. Imagine you were a boxer and you studied this guy for a fight, watched all his videos of his previous fights, and you learned his habits. You trained to counter him perfectly. The fight should be easy. You develop this perfect strategy. When he does his usual stuff, you just uppercut him. Easy fight. Well, you finally get into the ring and the fight starts, but something's wrong. His style changed. He trained too. Completely different form and technique. He isn't doing his usual weaving, so you can't get the uppercut off. This is you. The boxer is you. You have a decision to make. Are you going to stick to the plan? Keep trying to get that uppercut you've been training all these weeks for? Or are you going to adapt? Are you willing to throw away weeks of planning in order to do what it takes to win? Or do you just want to be right so badly and get that uppercut, perhaps lose the match trying? Right now, you're rushing Mike Tyson with uppercuts, but he ain't moving like Mike Tyson usually does. Uppercuts won't work. Throw a hook. You want a romantic story more than you want a victory. You have to be dirty about it. Win by any means. Use any tool. Last man standing. Fear death, but don't let it stop you. So that's the idea, guys. I want to add one thing, and this is something I was thinking about earlier today. So my buddy makes a point about blowing an account here. And he says, if you blow an account, it basically means your risk management is horrible. It means you failed. It means you lost the game. But the thing about blowing accounts is that you can have a really long run up before blowing an account. It's not like blowing an account happens in a day. So I'm going to respond to you now with what I wrote. And here we go is, the worst happens not when you blow the account. Sometimes blowing an account takes a while. It's the journey before. A lot of times you'll have a good run, then have days that are just pulling teeth. That's trading. Some days the market sucks. Some days you get insane moves and it feels like you're printing money. Other days it's a struggle to have 2 green trades in a row. It's the emotional buildup that takes place over time that can slowly tempt you to ignore the risk management principles. The worst part is a lot of the time it works in your favor, but the time it doesn't, then you blow your account. What I think matters so much is what you bring to the table when you come to trade the market. Are you bringing an opinion and a buildup of frustration? Or are you leaving that out the door and bringing a mindset that is ready to take what it can get based on the information the market is presenting currently, based on fact? Outcomes are terrible for us. The whole idea of having a profit target is so subjective, and unless it's based on market-generated information, it has no relevance to reality. Our problem is that we fuel unreal outcomes, and that adds to frustration and bad feelings we get when we experience losses. So the whole thing about fighting yourself, I want to make a point and say the market tests people to the point where it makes people want to fight against the market. All right? So your goal as a trader, I'm just going to say this might not be true, but I'm just going to say this right now, is one edge in trading is essentially figuring out which side of the market is fighting against the market. Which side of the market is fighting against themselves and trade against that side of the market. That's sort of how I'm seeing it. So in a downtrend, the bulls are fighting against the market. They're trying to buy dips because they're convinced that the market is going up. In an uptrend, shorts can't believe how much they're getting squeezed. Therefore, they continue to average down their short positions. They're fighting against the market. They're becoming blind to the information in front of them. All right, I'm going to leave you guys with that today. I wish you guys a fantastic day and take care. See you in the next video. Bye.